Welcome to the Global Energy Leaders Podcast, powered by R Squared Global.
Welcome to another edition of the Global Energy Leaders Podcast. As always, I'm your host, Ryan Ray. So good to have you. On this episode, we have Tom Kirkman, who is joining us from around the world. And a really interesting discussion. We talk about oil markets, Malaysia, China, a lot of things we get into here. And Tom has a unique perspective on how he sees fracking. An interesting perspective, at least from my standpoint, to kind of hear him stand back and say, okay, this is how I like to look at stuff like that. So hope you enjoyed the conversation. You can find all of Tom's information in the show notes page with his bio, where he's worked, and everything about oilpro.com as well. Without further ado, here's my conversation with Tom Kirkman. Well, Tom, it's been a while since we've had a guest on from across the pond, and you're way across the pond over in Malaysia. How's it going today?
Good. Yeah, we're quite literally halfway around the world. Doesn't matter whether you fly east or west, it's pretty much the same distance. It's a 13-hour difference between Houston, and it's morning here. It just started raining. Things are fine over here.
Well, good deal. Well, let's kind of set the table for Southeast Asia. Give people that might not be familiar with the oil and gas market, what's going on down there, what's kind of trending, what's the news. Just kind of give us the 30,000-foot view.
Okay, Southeast Asia is having trouble with oil prices and global oil oversupply, just like the rest of the world. Over here in Malaysia, Petronas, the national oil company, is pretty much the 800-pound gorilla. They're having a little bit of trouble, although they don't really like to say so in the news. Malaysia is about the third largest LNG exporter in the world, although they might have gone down a notch or two. In a couple of years, they'll be down to number 5. There's an LNG oversupply in Southeast Asia, and Petronas is adjusting by getting shorter-term contracts, more spot market, more trades. One of their biggest customers, TEPCO in Japan, is going to be renegotiating their contract when it expires next year. Malaysia imports more oil than it exports, but it exports a lot of LNG.
Where all is it exporting to? What are the biggest consumers of Malaysian LNG exports?
Asian markets, I believe one of the biggest markets is TEPCO in Japan. After the Japanese nuclear power plants had a meltdown due to the tsunami a few years ago, they ramped up significantly their LNG imports to produce electricity. So they've been one of the primary customers of LNG. But Malaysia deals with countries, I think 30, 40 countries around the world.
Okay, and one of the things I have is you mentioned Petronas there a minute ago. You've worked around the world, and you've worked for all these different countries. One of the things we talked about on the show before is the state-owned oil company. What do you think about the state-owned oil companies? Your kind of global experience. There's a lot of debate, I think, on the viability of those type of entities. The next decade or so. Do you think the state-owned oil company will be able to persevere, or as the free market economy kind of expands its way around the globe, will we see more entrepreneurial type mindsets that come in and say, okay, state-owned oil company, it was good maybe in the 60s, the 70s, and 80s, but now we want a multitude of companies that are going to come in here and try to export our product for us?
National oil companies aren't going to go away. Some will go under. I mean, you look at what's going on in Venezuela, Brazil. They're having significant troubles. In Malaysia, particularly, since I'm quite familiar with Petronas, they are definitely a national oil company. They're owned by the government. They're actually 100%. They report directly and only to the Prime Minister's office. So they're here to develop the national oil resources within Malaysia, but they also deal externally with 30-plus countries around the world. So Malaysia's internal oil reserves are declining. There's a lot more natural gas reserves than oil reserves. And to accommodate for that, Malaysia has operations all over the place, a lot of places in the Middle East, some places in Africa, although they pulled out some of those operations a while ago. National oil companies are a different flavor of oil company than the big multinational international oil companies. So yes, there's going to be a dynamic there between free market international oil companies and the national oil companies, which are there to protect their own national interests. National oil companies are there to provide revenue to the government, and international oil companies typically provide revenue to shareholders. So two different dynamics at work there, and I'm not sure if I answered your question there.
No, I think it's just a discussion that takes a lot of time to kind of weed through, but it's one that I find fascinating. And when I come across people like yourself who are on that side of the equation, so to speak, I'm always curious what their perspective is, because if you read the news and you follow the energy news, what you'll see is the state-owned national oil companies. You'll see corruption, and it's always kind of hard to figure out. Okay, well, how much is corrupt? How much corruption is really there, and then how much is this overhyped by the news, and how efficient are these companies being ran? And so I'm always curious to get the quote-unquote insider's perspective on that.
Okay, this is an area which I would love to talk about, but I have to be a little bit careful. You have to understand, in this part of the world, I don't exactly have the same latitude of freedom of speech as, say, the US. So I don't really want to get myself in trouble here, so I'm going to dance around a little bit. Corruption is an issue. It's acknowledged. It's hard to determine exactly how much is involved and how much it affects the oil, national oil companies and the markets. It's just something you sort of got to deal with it. I tend to veer away from it. Since I'm an expat, I stay 100% clear of it. I don't want to get thrown out of the country for, doing something illicit. But it's fairly widespread in Southeast Asia, and that's just the way it is. You look, I think the worst example of corruption in an NOC is look at what's going on in Venezuela. It's just destroyed the whole country, not just the oil company, but the whole country. So it has huge ramifications. So Petronas has acknowledged they had a problem with it in the past, and they have taken definite steps to improve it. It's become very clear that corruption is not wanted, but I'm sure some of it still weeds itself into, business dealings. That's just the way it works.
Sure, and corruption, it can be anywhere, right? It doesn't just because it's a state.
Yes.
Yeah, it does. So I'm not saying that just because it's a national-owned oil company that there's corruption. Just because of that, there's corruption here in the States, and so it's just the checks and balances and how it works itself out is different. Because here, obviously, you're going to have stockholders and all this stuff that's going to try to balance it out. And there, you're going to have the government. So it's just a different model. And one of the things that I find interesting is when you talk to people here in the States, a lot of people don't realize once you get outside the U.S., it's a completely different ballgame and how it works. And so you'll hear these names on the news, these big companies, they're outside the States, and you don't really understand how it's working, and you don't understand that, that the landowners outside the States don't have mineral rights. And so it's just a lot of different dynamics to explore. I'm not saying that every national-owned oil company is corrupt. It's just you do read a lot of stories about it, and the ones that you read about here in the States, they have a different flavor to them, SEC investigation or whatever the case may be. And so it's just a discussion that I like to have. So I'm definitely not trying to get you in trouble. It's just curious to see your perspective on it.
It's an acknowledged problem. It's probably not as bad as you may think it is. And also, I've got a different view. I'm a U.S. citizen, but I haven't been in the U.S. in 16, I haven't lived there in 16 years. So shareholders basically want value for the money. National oil companies, the government wants value for their money. So there will be contracts handed out to, relatives, to close associates of government, officials, stuff like that. But in the U.S., you've got businesses in oil that are handed out to friends, to politically connected people. So it's a different version of the same sort of thing. The companies that have a lot of money, of course, people are going to pay attention to it, and they want a bite out of the pie, to keep themselves happy, to keep their friends happy. So let me throw you a curveball here. The shale industry, the tight oil, aka fracking industry in the U.S., I view it as pretty much a Ponzi scheme. And I'm quite sure most of your listeners are going to disagree. But what I see is they're borrowing huge amounts of money to finance things that 20 years later still are not going to be paid off for the most part of it. Yes, break-even costs are thrown out, but I don't believe the break-even costs, once you factor in the amount of debts, bankruptcies that have been done into it. You hear break-even costs from $40 to $60 a barrel. And I think it's much higher than that once you take into account all of the costs that are with it. So what you've got is the fracking industry in the U.S. has to borrow more money to keep drilling. Otherwise, they're going to stop treading water and sink. So I don't view that as corruption. I view that as a totally different way of doing business. And in national oil companies, basically the governments are addicted to the oil money revenues the same way that the owners of some of the fracking oil companies, the independent fracking companies, are addicted to the proceeds they're getting from borrowing large amounts of money, drilling wells, getting quick returns, and having 20 years of debt ahead of them.
That's an interesting point you bring up there. I remember when we were working for Chesapeake during the Haynesville Shale, and all of a sudden our clients called us up and they said, "Hey, guess what? For the first time we've been at Chesapeake, we heard the word budget." And so we're like, "Okay, so we got budgets now. We're used to that, but they weren't." And so we start working on budgets and trying to get everything together. And then it's we got to reduce rates. And then all of a sudden, the plummet began to happen. And then I remember there was a number thrown out. I can't remember what it was, but it was Chesapeake got an extended credit line for hundreds and hundreds of millions of dollars. And I just remember thinking, "Oh wow, they're not operating off of cash." I just kind of assumed that whole time that they were just because you would hear the numbers on what they were making on the wells, and then you're like, oh, and then they were like, well, we got to reduce X amount of percentage of our work because we can't afford it, and you're talking hundreds of millions of dollars of a credit line, and they still couldn't keep up the pace, and I was like, oh wow. So that was kind of my first eye-opening moment that okay, what's going on here is like you're saying, there's a lot of money that's coming in from banks and being lent, and and this can be made back, and then some of those companies go out, and those assets are sold. So there is a lot of stuff that's happening, and that's something that doesn't get reported a lot. Is how this happens. I mean, you will hear company A went bankrupt, and stuff like that, or company B didn't, balance its budget right. But you're right. There is a lot. There's a larger system at play where the price shoots up, and all of a sudden these people are going and getting large credit lines, and they're going out and drilling. And if they don't get it done in a certain amount of time, the price goes back down, and then as we've seen in the Permian this year, tons of deals are happening because companies don't have money anymore.
Yep. It reminds me of a situation of getting a credit card to pay off other credit cards.
Yeah.
It's a vicious cycle, and the deeper you go in, the worse it gets, and you might get a short-term fix. And I will say that probably some of the independent fracking companies, tight oil companies, can make some money, but not the amount that's being reported. And basically, it depends on huge credit lines. You take that credit away, it's not sustainable. So you look at this, I just see a treadmill going where they have to borrow more money to drill more wells to get some more revenue from selling the oil to pay off the debts they had from the last oil wells that they drilled. So at some point, I see yet another crash coming up in the U.S. markets as far as the fracking tight oil, and actually a lot of the hydrocarbons extracted in the U.S. I know I'm really kind of getting off topic here because you wanted to hear from overseas, but I am a U.S. citizen, so I pay attention to what's going on in the U.S. A lot of what's extracted, the hydrocarbons in the tight oil, is condensates. Not exactly what you would call oil. There's more natural gas. There's large amounts of water, and there's only about a 5% recovery rate of oil and maybe 20% recovery rate of natural gas. Most of that stays in the ground. So you're doing a lot of drilling, and you don't really get a long-term investment. The decline rates are really, really steep. There's a guy named N.O. Peters. I've never met him, but he's got a wonderful site that gives all sorts of data on what's going on with the fracking industry in the U.S., the recovery rates, the decline rates, what the production is. He's done a lot of work on it, so maybe people might be interested in Googling it. I've got no connection to him whatsoever. It's just he's done a lot of research on this, and I tend to agree with what he's come up with, that the fracking industry in the U.S. is taking a short walk off a long pier, basically.
Well, it's interesting because one of the things that I've said is, and I would be curious to see how it works into this hypothesis, is that I want stability in the oil market. I don't like the booms. I've gone through 2 boom and bust cycles, and as someone who runs a company, having to lay off people, that's the worst thing in the world when you have to go in and say, yo, Tom, you didn't do anything wrong, but guess what? You're out of a job today. And so from my standpoint, the other thing that happens in the boom cycle is you start seeing people coming to the business who they don't have any experience. And so you're trying to train, and the pace is so fast, and the cost of your services are rising. And it really just works against us in the long term, because then you have massive layoffs, and you're familiar with all this. I'm not telling you anything you don't know.
Yes.
But so I'm really hoping that that we can see stability in the market. And, stability is kind of a loose term. But I'm hoping that we see some stability in the market, at least for the next couple of years. I think that would be the best thing for everyone involved. Some of these cash problems that you're talking about, we can kind of see them play themselves out. We'll see the bigger companies, what debt they're going to buy up, what debt they're not going to buy up, and it'll kind of balance the market out. So I'm just hoping for stability. I think that would be the best thing. Now, I am curious, though, because you mentioned international, which is definitely what I want to talk about. So here in the stateside, we know what happens. So oil goes up to, it starts climbing. Well, we know what happens. The phone starts ringing. Hey, we're going to drill. We're going to lay pipe. We're going to do all this stuff. What's happening in a place like Malaysia when you see the price start to skyrocket?
Not much happens, to be honest, because in the U.S., Western companies in particular tend to deal far more short-term, quarterly results, longer term, maybe annual results, but it's basically quarterly dividends to shareholders. Very, very important that you give money back to the people that invested in the company. In the national oil company, it's a little bit different. They've got a little bit longer term. So I'll take the example of Malaysia. The Petronas has grown from a tiny little company to the only Fortune 500 company. I think they're a Fortune 100 company, the only Fortune 100 company in Malaysia, because they've expanded their operations way outside of their borders, and they are trying to constantly invest in new markets, new reserves, and what's clawing at them is the government keeps demanding quite a large dividend. The biggest problem that I see with Petronas is the government has taxed them to death over the years. They've just extracted huge amounts of money, and that money's just gone. The political parties use it, and there's no, some of the Norwegian countries took oil money and tucked it away for a rainy day, and now they're starting to draw it down. But Malaysia doesn't actually keep that money. It goes to the political parties, and it's used by the government. So what's happened now with the prices gone down for, basically a couple of years, the dividend that Petronas has to pay the government, which used to be almost 40%, 30 to 40% of the government budget was from oil money. Now it's down to closer to 20%. I don't know the exact figure, but now the government has had to introduce goods and sales tax to make up for the shortfall in the oil revenue. So other national oil companies in the area, Indonesia, other regional players are also having problems with their government budgets because they're not getting the oil revenue. So in the U.S., government gets a little bit of money from oil revenue from taxes, but you don't really have an oil tax in the U.S. the same way you have from national oil companies. So kind of wandering off topic here, but since Malaysia has had a significant downturn in the amount of oil revenues that are connected from Petronas, the government has turned around and just increased the taxes on everyone in the country.
Right. So one thing that you mentioned earlier, if I understood correctly, is that you have an LNG glut, but you have an oil deficit. Is that correct?
Malaysia imports roughly about the same that it exports. It exports the high quality light crude and imports much lower quality crude and refines it for local use. But they're pretty much at the break-even point. If you take LNG out of the equation, Malaysia is teetering, just barely a net oil exporter. When Malaysia becomes a net oil importer, and I'm not saying if, I'm saying when, because it's only a matter of time, a lot of the subsidies that the government uses that are financed by oil money will have to go away. The thing that will save it probably is LNG revenues, liquefied natural gas revenues, but I see a global glut in LNG until around 2022. It's about my best estimate where the global LNG markets will swing back from being too much supply in the market to, okay, now we got to ramp up again.
Okay, and that kind of leads me to where I wanted to go next was, I think we had on episode 7 or 8, we had on Dr. Ulf Richter from Tongji University in China, and he mentioned that China is stockpiling oil. So from a trade agreement standpoint, is Malaysia and China, is there good trade agreements there where that Malaysia could come in and buy some of that oil from China, or not
yes.
on the up and up?
Touchy subject here.
Uh-oh.
Due to no. I'll dance carefully on this. Malaysia has had a little bit of financial difficulties due to some business deals that have not exactly turned out the way the government wanted them, and China has come to the rescue. They've invested significant amounts of money and have basically rescued the Malaysian government from losing a lot of money on bad business deals. So in exchange, China's been buying up power plants, land, assets, all sorts of interesting things. But on the other hand, last week, one major contract was canceled and things are being put on hold by the Chinese government. So right now, China and Malaysia, yes, are on good trade terms. I believe China is the largest trade partner, individual trade partner with Malaysia. But things are getting a little bit touchy in that area right now. So getting back to China, yes, China has huge amounts of oil tankers. They ran out of places to store oil, so they were building oil storage places left, right, and center, just stockpiling oil while the price of oil is down low. So now that they've got huge stockpiles, I think the amount of oil that they're buying has been decreasing, although I don't have figures off the top of my head.
Okay, and then one final question. You brought up tankers. It made me think about the LNG. We talked about on the show before about the I'm losing my mind. The sulfur emissions, I believe, the regulations that are coming in place in 2020 for the cargo ships. Is that why you're thinking 2022 for the LNG price to kind of rebound? You thinking that might have enough impact on the market to balance it back out, or is there other factors that you're bringing into that equation?
No, what's happening is so many places. A few years ago, there was basically a gold rush in LNG. Everyone figured, a lot of countries figured, oh man, I can get rich with LNG. So Australia built huge capacities for LNG. The U.S. has started huge capacities. Russia has been ramping up. Qatar is still the leader. Malaysia is, I still think, number 3. And the problem is too much capacity came on the market. Just like the slump in oil prices when there's more oil being produced than is being consumed. Right now, more LNG is being produced than is being consumed, and it's only going to get worse until around 2020. Still, all that time, for the next few years, more LNG is going to be produced than is going to be consumed. What do you do with it all? When you've got an excess supply in the market, of course, the price is going to plummet. So a lot of LNG plants that were being planned were canceled. For example, in Canada, a number of LNG, I think 19 off the top of my head, I think 19 LNG facilities were tentatively being planned. Almost all of them got canceled, deferred, delayed, and even Petronas is putting on hold their final investment decision for a very large $27 billion US dollar LNG facility in Canada. Basically, there's still an oversupply. And it takes about 5 to 7 years to build an LNG facility. So you're talking LNG is like a 30-year game. It plays out in decades, not in years. So even though LNG is going to be oversupplied until sometime after 2020, 2021, 2022, somewhere around that, probably by next year, more LNG plants will start being reactivated to be built, just because it takes so long to build them, and then they'll jump on the bandwagon when LNG consumption exceeds LNG production.
Okay, so one final question about world politics in general, because we just did a Trump 100-day roundtable, so I am curious, as a U.S. citizen in Malaysia, not to get into your political views, but just how is the coverage of President Trump? Obviously, he's in the headlines here every day, whether you love him or hate him. There's always something to talk about, it seems. From that side of the world, I'm just curious, what's the reaction been to President Trump's early days in office?
Wide reactions. I've had wide reactions. In the beginning, I was very, very much against Trump. And over the course of a year, during the last 18 months or so, my viewpoints changed. I don't think he's particularly a very nice guy, but he's got plus points. He's not a politician. He's a businessman, as he came out and said very clearly a while ago, and which really caught my attention. He says, look, you can't bribe me. I'm already filthy rich. So I'm going to make business deals. So yes, in my view, I don't trust governments in general. It doesn't matter what government. I just generally take a dim view. They're a necessary evil. So Trump is in power. His family is going to make money off it. But on the other hand, he's not a politician. It's going to give a well-needed kick in the rear end to the political system in the U.S.
Okay, well, one final thing. I want to transition. You're involved with Oil Pro. Can you tell us what is Oil Pro, and how do you get involved, and what would be the benefits for a listener to maybe get involved with something like Oil Pro?
Okay, I'm just a volunteer. Anyone can join Oil Pro. It's an oil and gas website. It's, as far as I know, I think it's the number 2 trafficked, according to Alexa, the number 2 oil and gas website on the internet. The reason I'm interested in it is there's a lot of very good oil and gas websites out there. This one has a very good discussions area. It's reader-driven. It's comments-driven. For example, Rig Zone is still number 1, but basically there's virtually no comments to go there. You can't really, it's difficult to get published on there. They've got really good information. You got oil price. You got a number of other sites. I was offered to become a volunteer moderator on Oil Pro just because I was so active in the comments section. So there's some pretty feisty discussions there. People generally stay well behaved, and it's the way I view it, Oil Pro is sort of like LinkedIn for oil and gas. It's very specific. We try and stay on topic, and there's a wide variety of views. It's still about 50% North American membership and about 50% rest of the world. Although I try and stay away from U.S. oil and gas, and try and post information about the rest of the world. So I just like it because it's very specific about oil and gas, and I can pretty much say whatever I want. Within a reason, of course. It's a professional network. It's not like Facebook where people get off on wild political rants.
Right. Well, no, that's great, because one of the things, and I love doing this show because you bring on people like yourself and people from around the world, and they're always educating. There's so much to know about in energy, and then you break down energy into like oil and gas, and there's so much about oil and gas. There's always stuff to learn from, and there's always there's a lot of good resources out there. So this is just another one that looks like that for our listeners probably need to go and check out, and they can interact with you there in the comments, it sounds like, as well. So look, thank you so much for coming on. This was very insightful for me. Malaysia is something I haven't ever dealt with or studied much about, so it's it's always informative, because you start asking questions like, okay, well, hey, I heard this about China, and how does that connect to Malaysia, or how does this connect to this? It's all connected some way, right? It's just trying to understand how it is connected and how it all works together, and it's a big world out there. So I always enjoy these types of discussions where you get to see the bigger picture. So thank you so much for your time. We enjoyed having you, and look to have you on again in the future.
Okay, thank you very much. It was a pleasure.
Okay, and thanks again for Tom joining us. And as promised, we have our winner to announce. Not going to give out all the information again because of the nature of the giveaway. We have all their contact information. But Greg, you have won a copy of Oil 101, and we will get that in the mail to you very shortly. And so we hope you enjoy that. Thank you for everyone who joined us for the giveaway. And not going to have one coming up anytime soon, I don't think. We're kind of pausing the giveaways for the next few months. We've got a lot of other stuff going on. But that doesn't mean you cannot give us a 5-star rating and review at iTunes if you've enjoyed our content. We would really appreciate it, and it helps us spread the word. Thanks again for tuning in, and until next time, keep climbing.
Thanks for listening to the Global Energy Leaders Podcast, powered by R Squared Global.